Rob, you heard those comments from Fed Chair Jay Powell about this idea of trying to get things moving in the right direction. What exactly is the holdup here for the Fed in getting that real economic growth and that real inflation stoked a little bit more?
Dom, I tell you, it's a real conundrum as to why inflation isn't starting to move higher, which the Fed would certainly like. I mean, in the last pronouncement, and then of course in Chairman Powell's comments yesterday, there's definitely a high bar for cutting rates anymore, but there's probably even a higher bar set to raise rates because the Fed wants to see inflation consistently at or even slightly above 2%. And it's a real mystery with the strong economic growth. Wage growth is starting to pick up a little bit, but inflation growth has not. And it's kind of, I'm sure you've used that term Goldilocks economy many times in your career, and that seems to be what we're in right now.
So Rob, as you look at the balance of economic data in the markets and the dynamic developing here and abroad, is the Fed's more likely move the next time around going to be a rate cut or a rate hike?
I think, Dom, the next move, and it's not going to come anytime soon, as I said, but it will be a rate cut, and that certainly factors into kind of our overall investment thesis.
So, all right, so a rate cut in play here. What exactly does that mean then for a market that's near record highs right now? There are places that have been left behind. They're playing catch up a bit. We saw a nice move higher in small cap stocks yesterday. So if there is a trade that's going to reflate the overall market towards record highs like we are right now, where is it that investors can still find some of that catch up value if they've missed the move thus far?
Well, Dom, I think assuming that there eventually will be a rate cut, that should nudge the dollar lower, which from a very large macro scale should help big cap multinationals. They benefit from a lower dollar. So I would suggest, even though small caps did well yesterday, I would overweight the large cap growth stocks here. For U.S. investors, I'd overweight the international space. And then, of course, if you'd like, we can get into the individual sectors of the S&P 500. But I think that kind of sets a big picture background for where things might be going.
Are there key sectors or industries that you think would be within that side of things better positioned? You mentioned the large cap growth side of things. Is it technology, communication services? We're talking about names like, of course, Facebook and Alphabet, the parent company of Google, Amazon, or is it more down the lines of the industrial type names that have been beaten up, maybe like a 3M or names like that?
Yeah, well, technology, Dom, is certainly it's one of my three favorite sectors. Also, like financials, with the re-steepening of the yield curve, they should benefit from that, as well as utilities. And would underweight here healthcare, consumer discretionary, and telecom.